Specific tips on how you can set your family up or yourself up to beat the trap. Now, we talk about the corporate trap. Amir, one of our clients who was standing here, we just helped his mother in a corporate trap situation on retirement. Many of us go into jobs, no side hustle, banking on a pension or retirement. Here's some specific game on beating the corporate trap from a financial perspective. The motivational side, I guess we all get. We all want to be owners. We don't want to be slaves to the job, the 9 to 5, the rat race. But check this out. Another thing they don't teach you, they can easily teach you, which I'll give you. On the corporate side, most of us get some kind of 401k, pension plan, or retirement account, right? What they don't tell us is this. So a lot of times they scare you talking about the 401k penalty, right? Oh, you can't break it, you get a penalty. Or they tell you to hold this money in your 401k until retirement, 65 years old. But again, it's the misleading, misguiding information that benefits who? Them. They never tell you anything for your own good. So check it out. You got 70 grand in your 401k or pension account. Many of these can be broken. Let's say the penalty is, we'll call it, what's that? It could be 50%, but here's what they don't tell you, is that you don't have to choose this kind of retirement account. You can roll over your 401k into a 403b. You can roll it over into a self-directed IRA. Self-directed meaning you control it. But what they want you to do is put it into a 401k that they control. And tell you that this 3 to 5% a year, and 5 is on a, yeah, right. Really, this 3%, I'll give you 5 just for the benefit of doubt for dramatics. Tell you that this is going to be your win. So now, here you go. You get your 3 to 5% a year, but that same 70 grand, you could have rolled over to a self-directed IRA where you're in control of the money, took the same 70 grand, and then it went and bought a piece of real estate with it. Whether that be buying it cash, or putting 20% down, or 10% down, or whatever the financing looks like. But you get way more benefits. You don't get any tax advantages from your 401k. You get minimal equity. You have no power and control, and very minute ownership. So you got to think, 3% on $70,000 is $210 a year. So this is what I'm saying. This is what they don't teach you, the simple stuff. If you have 70 grand in a 401k getting you 3%, you're making $210 a year. So what you got to ask yourself is, if I could direct this where I control the money, can I make more than $210 a year myself with my own 70 grand? If you are wealth educated, you should be able to. You should be able to go put, with 70 grand, you're talking about 20% down on a $350,000 house. So you could put 20% down on a $250,000 property, and all you got to do in positive rental income is beat 210 a year and you up. Plus the equity, plus the appreciation, plus the power, plus the control.